All right, good morning, everyone. Let's get right into the stock market charts. We're going to look at the broad market indices, and I'm just going to kind of browse around, show you guys a few things for what's going on today. I want to start out today with the SPY, the S&P 500. So I keep hearing on the, on some fellow YouTubers about this reverse head and shoulders pattern, and I want to talk about that. So this is what I think they're calling out is you've got this shoulder here, you have this kind of double bottom head, and then you've got this right shoulder, and they're looking at this as a reverse head and shoulders, which the neckline right now is kind of right up in here, and you basically would look for a break above the neckline and off to the races. Now, yes, that could play out, but one thing I do want to point out, the reverse head and shoulders, or just the head and shoulders in general, I think are thrown out. They are thrown out quite easily. One thing is you usually want to look for these patterns at the end of an extended downtrend. So the reverse head and shoulders, you want to look at the end of an extended downtrend. And this is not a downtrend. This is not an extended downtrend. Okay, we basically the all-time highs in the S&P 500 are right here. Back in December, we're a couple months into what looks to be the start of a downtrend, but this is not, you could by any means say, an extended downtrend. I mean, we're only about 7.5% off the all-time highs. So that's one thing to take note. The reverse head and shoulders, usually you want to see that after you have a big long downtrend, and then you start to look for that, and that could signal a bottom. But just to have a minor correction like this so far, and in the S&P 500, and then to call a reverse head and shoulders pattern, to me, it just doesn't make any sense. So I'm not necessarily really looking at that. I'm looking at some other things that I see in the charts. Now, zooming in on the 200-day moving average, you can see we're basically we're right here at the 200-day moving average, a little bit below, but for the close enough, we'll call it, $445 stock. So we might hit that, but we keep getting rejected at the 200, and I think we will be rejected likely right in this area again. Looking at the Qs here, so the Qs, if I go to the hourly, you can see we're really just chopping around. We're just kind of thrashing around. It's just whipsaw signals. It's we hit support, we bounce to resistance. We're just doing that. So until we resolve one way or the other, we can't say which for sure where we're going next. I'm anticipating that we're heading lower. Now, I think we're doing that. Basically, there's a lot of reasons, but based on the bigger picture pattern, that I do believe we started a downtrend, and that comes from the daily chart. But here on the hourly, if you want to just wait for the benefit of the doubt, you can wait to take out the recent lows right here at 330. It's about 338.6. And if we do that, then it's very likely we're going to head down to these lows that we saw back in early March, mid-March, about 318. All right, and the probability says that if we get back down there, we're very likely going to take that out as well. The reason why I say that is, look, you've hit it once, you hit it a second time, you had a nice impulsive rally. All right, now if we're starting an uptrend, this would be the first leg. We'd see this kind of corrective pattern here, and then we'd start the next leg higher. Okay, so if we're going to continue the uptrend and likely go on to make new all-time highs, you want to look for this, all right? But if you don't see this and we head back down here, if we're back down in here, it's very likely that we are actually in the downtrend pattern, which is like this. You have a bear market rally, and then you continue to the downside. Okay, so that's what's going on right now, and that's why we're seeing kind of a battle going on over the last couple days or weeks, really the last few days, is, the bulls think we're going higher to all-time new highs. The bears think we've started a bull trend or a bear market. You have to pick a side, basically. So from my perspective, I'm looking for more downside. Again, on the daily chart, there's a couple reasons why. I mean, one, if I go back to the SPY, and this is what I always do to justify positions. I look at the weekly chart. I see a bull trend that has been broken. Okay, here's your weekly chart on the SPY. All right, you can mimic this chart. All right, and again, you've got support on the weekly, support. We hit support again. We broke support, and the reason why this corrected right up or had a back test right up to resistance is because the Fed stepped in. All right, December 2018, the Fed stepped in, changed their policy. All right, so you got the rally. And I talk about this a lot because this is bigger picture stuff, but this is likely the information that I think is going to be relevant for the next decade or so in terms of where the price and markets go. All right, so then we back tested that trend line, and then all of a sudden the market cared about COVID. That's the COVID drop. All right, COVID was known to the market in advance of before the drop showed up. It wasn't like it just came out of the blue. We started hearing about it in the weeks and maybe a month and a half or so before the drop, but it only when you hit back tested resistance and couldn't break above did you fail. Okay, then the Fed did more pumping, more policy change, and they recovered that trend line right here. All right, this is 2021. They recovered it. They managed to recover it, but boom, we broke back below. All right, so the market continues to try to go into a bear market without Fed stimulus and money pumping and interest rate reductions. The market keeps trying to go into a bear market, and it's likely going to continue that path until or unless the Fed comes out. So again, we're below the trend. This is why I think we're heading lower. This is one of the reasons why. Okay, Apple. I want to point this out. So I just moved this trend line. I had this one. I think I previously had it like this, but we've got another reaction. So we now have a downtrend that we can really follow, which is about right here. So you can see before we had one data point, 2 data points, but now we have a third reaction. We're getting a rejection off of this. So we've got a downtrend to follow now. So that basically tells me that Apple is in a downtrend, and until it breaks that downtrend, we should continue lower. And if Apple's selling off, you're likely going to see the Qs and the other FANG stocks sell off as well. All right, so Apple to me looks like it's going lower. If I look at the daily chart as well, on the daily, we have this price channel right here. This was started back in September of 2020, and you can see this is lots of tags to create this trend line. And here's your bottom, here's your support, very good support down here. All right, 1, 2, 3, 4, 5, 6, about 7 tags of this trend line. So the longer term sell signal in Apple won't come until we break this trend line right here. But to me, it looks like we're heading back down to that trend line in the short term. All right, we're in a downtrend, and it does look like we're going back down there. Now, when you see that break, that's going to be bigger picture stuff. We're likely going to start to see the next leg lower in the stock market. But yeah, that's what I see in Apple, and that's about it, really. I'm just, short term, if you really want to narrow it down to what I'm watching, it's this right here. All right, as long as this downtrend is intact, Apple should continue lower down towards that major trendline support. The markets should continue lower as well, at least tech. And yeah, that's it. Now, you did have slight bullish divergence right here. That's all right. So look right there. See that on the hourly chart? Minor bullish divergence. All right. So you made a higher low in momentum, higher than previous, and price was lower. So yes, you have bullish divergence, but we also have a downtrend. And divergence, again, is not a reason to get out of a position. It's just a mere indication that the conditions are there for a reversal. But this is really short-term stuff. We're looking at the hourly. So in general, this little rally that we saw right here might have been all that there was for this divergence to play out. Okay, so I am continuing to side with this downtrend and looking for more lower prices until this trend's taken out on Apple. Then this should continue to be a headwind for tech in general, triple Qs, and a lot of these other short trades that I've pointed out. Okay, gold. So gold, we had a little bit of a sell signal yesterday where we broke down. So the range that I'm really watching is right about here. We've got lots of tags of this area. It's about 1917, 1920, somewhere right in there. And then, that should hold as support right there. So maybe gold wants to sell down and hit that and then rally. I don't see big selling pressure in gold, and we're just kind of continuing to just chop sideways. We're just again, this is just this big, we've been in this pattern right here for quite a while, kind of little breakout, failed back down, we're back in the range. So again, it's just this pattern. Until we resolve one way or the other, we're just stuck right in the middle of key support and key resistance. Key resistance being up here at the all-time highs about 2075, and then key support, I see, as of right now, this downtrend line right here out of this isometrical wedge that we were in is not going to be in play for very much longer, because the thing is, time has ticked on. And so if we got down there, we're probably going to hit more significant support before we backtest that. And so again, more significant support is the bull market trend line going all the way back to 2018. All right, there's gold. This is in a bull market. We continue to hit support. There's another tag of it right there. Lots of tags. All right, so that is your major support. If we just extend that out, that basically is where we would signal major support. All right, so if you do get down there, that's the buy area. Otherwise we resolve to the upside. So again, I'm looking to buy the dip. All right, if you do dip, I'm looking to buy for higher prices. Otherwise, okay, next up we've got GDX. So this is the miners. You can see, again, I'm just watching this uptrend line right here. So my GDX and the miners in general have been in an uptrend, and today they dipped it below, but so far we're holding. So unless we see some impulsive breakdown of this trend line, then we're still in a bullish trend. Now the thing is, we do have negative divergence, all right, on the GDX. So I'm watching that very closely. If we get an impulsive breakdown and a sell signal in GDX, then yes, we could come down, probably test the 200-day moving average down here about 33.30. Otherwise, we'll likely, if we continue higher for much longer and get some sort of impulsive buying, we're going to burn through this bullish or this negative divergence, and it will no longer be there. So until I see that sell signal, I'm still long the miners in general. Okay, so while we're on the topic of gold, we want to look at the dollar, because gold is priced in dollars, so typically it's going to trade inverse to the dollar. Doesn't always do that, but it does typically do that. So on the dollar, the big thing that I'm looking at, if I look at the weekly chart here, you can see as I roll out, basically going back to 2011, so pretty much the last decade bull market in the dollar. We've got this trend line to follow where we've got, we kind of bottomed out here in 2011, and then we hit support. We hit support again. Here's your COVID drop. It hit support again. So we got 4 tags of this really long-term trend line, and we broke that trend. We had a sell signal right there on the dollar in July of 2020. And recently, you can see we've ran all the way up and back tested this trend line. So as of right now, we are at major resistance in the dollar, and I don't expect the dollar to go too much higher from here. Now, we can grind around for a couple weeks and just kind of hang out in this area, and that's probably what we'll do, is probably just kind of grind around, making gradual higher highs in price, but not by much, and probably going to start to put in some sort of a divergence. I don't see that divergence yet on the weekly. If I go to the daily, we do have negative divergence here on the daily, okay? So we're at major resistance with negative divergence on the daily chart. To me, this seems like, it's an objective area to short the dollar, which should, if the dollar falls, that should be a tailwind for gold, okay? And you should see, that should really help gold rise. So that's really what I want to point out there on the dollar. Financials, okay, so again, just recently, financials bounced off that 37 support area. That was that's just a key level of support. Whenever we get down to 37, you really see the battle take place, at least on the intraday, where they're really trying to hold 37. So far, it's been successful. The shorts have given up, and they're rallying the financials. Got the 200-day overhead. I think that's likely going to prove to be resistance right up here at about 38.60. And we'll watch that, but I do think that's likely going to be resistance, and then we'll probably head back down to 37. Again, from my perspective, until we break that 37 with a nice impulsive sell signal, I just don't see a sell signal on the financials. And at the end of the day, for a broad market sell-off, you want to see these financials break as well. Now, we might see a sell-off in tech, but not get that broad market sell-off. So to see that broad market, and at the end of the day, I think we're going to get the broad market sell-off, and I don't think the correction or this next wave lower in the markets is over until we see the broad market sell-off. So that might signal a lot more downside in tech until we get this broad market sell-off. But again, that's what I'm watching on the financials. 200-day as resistance and that 37 as support. UNP continues to flag out. This is a bear flag right now. So we've got the flagpole. We're flagging out, breaking to the upside a little bit on this daily chart, but the day's not over. I suspect we could even rally all the way up intraday, hit the resistance, and then fail. But I suspect we're likely going to not really close the day above this 247.75 area. At the end of the day, this still is a bear flag, flagging out, and it's projecting us to continue to the downside. Right now, that basically our target is about 215-ish, 216. That's where this is projecting. So I like that as a profit target on UNP. UPS, same situation, bear flag here. All right, we've got the flagpole, we're flagging out, and this is projecting us to continue down. Right now, it's putting us at about, let me close this, at about the, about 163.50 or so. So kind of right in between this range. We've got a zone of support. If we get down there, we're likely going to run down and hit this 156.80. But this is the zone of support right down in here. So that's, if we head down there, that's likely where I'd want to cover the short trade that I have on right now on UPS. ABBV, this is not much going on today. It's just kind of hanging out. Right now, it looks like they're trying to build a minor support right here at about, if we go to the hourly, it'll probably show a little bit better. Yeah, somewhere right in there. It looks like they're really trying to build some sort of a support at 156.50. So maybe we get a rally, a short-term rally. We do have bullish divergence on the hourly right here. So you'll see that it's clearly showing up. And that might be good for a short-term rally. There's a downtrend to watch, which is roughly right in here. It's not super well defined, but we'll call it right in there. And so maybe we're going to, the point is we have some bullish divergence on the hourly. They're trying to hold some support. ABBV might want to backtest this broken trend line up here. Sorry, wrong tool. Might want to backtest that trend line, which is at about 167 or so. So going to the daily, I could see that happening and playing out, some sort of a rally into the backtest. From my perspective, I would be looking to add or short a position if you haven't done so right there. I think that's a good opportunity. But in the short term, maybe a rally. Okay. Tesla. Okay, so Tesla, pretty impulsive selling today. Nothing that's, we're not technically breaking any pictures, but in the short term, we have what looks like a bear flag. All right, so we got a flagpole kind of flagging out right here. And I think we're probably going to continue to the downside. It's projecting us right now at about the 200-day moving average. All right, there's your 200. That's going to, they're probably going to come in together. So I would say that's very likely in the short term, a move down to the 200-day. From where we're at right now, that's another 9% to the downside. And I'd say that's very likely. All right, that's what I see in the charts right now. So Tesla also has earnings coming out, so we'll see how that plays out. The chart, when I look at, it's definitely higher risk to hold a position into earnings. I'm going to hold my short position, but obviously, who knows? Maybe they'll come out and the market will see it as good earnings and they'll break out to all-time new highs. I don't know. I see a flag. It looks like it wants to head lower, and the market in general, I'm seeing signs that we could go lower. So we'll see. And TLT, I know a lot of people are interested in this. So this is your treasury bonds, possibly due for a rally. I'm kind of eyeballing it, but TLT, we've got this downtrend. This is really impulsive selling in the bonds. We have this downtrend. We also started to put in some bullish divergence. Let me kind of show that right here. that is showing up really right here. You can see that we're just making on the PPO, not so much in the RSI, but definitely on the PPO. And we're starting to break out. It's not that impulsive though, so this is not good enough. I need to see impulsive selling that would come in the form of maybe a gap up or, you know, big impulsive breakout candle. This is not it. So to me, that tells me that this is likely going to fail. And unless the impulsive selling shows up later today, I think we're heading lower in the bonds, which means interest rates are going to continue to rise. Probably one more move in the treasury bonds should do it for the market breaking. And, you know, as interest rates rise, we should see tech really start to fall. So maybe one more move in that. And if you look at the interest rates, TNX, you go to the weekly chart here, you'll notice that basically this is your 40-year-long drop in interest rates. This is what's caused markets to rally basically since, you know, the late 80s, basically, is the fact that the Fed has dropped interest rates, creating stimulus. And here we are as I zoom in. And again, I just want to point out all the reactions that you have at resistance. All right, there's another one. There's another one. All right, and there we are right there, zooming in, pretty much there. So if we pop and see some sort of impulsive pop above here, interest rates spike above this long-term trend, that's going to spook the market. I would say it's almost guaranteed, as good as you can get. So a spike in the interest rates from where we're at right here should spook the market. The market should sell off. You should see the VIX pop. Look for that. And you'll see markets start to sell off. And as that happens, then institutions will likely transition into bonds as a safety play, and you'll see the interest rates start to come down. So it could be a false breakout. Maybe we break above, then come back down and have some sort of longer term corrective pattern where interest rates fall as the market continues to sell off. All right, that's just potential, just hypothetical, just things to look for if you see it. So that's all I got for today, and I will catch you guys on the next one. Bye.